Welcome traders to the Polaris Trading Group PTG University Indicator Review. Today's indicator we'll look at is the AJ Oscillator. And what the AJ Oscillator does is identifies the first pullback trade setup. Last century, W.D. Gann postulated that the safest place to look for a new trade is at the end of the first correction to a new swing. The AJ Oscillator is specifically designed to identify exactly what W.D. Gann discovered last century, that in fact, the safest place to enter a new trade is on the first pullback following a breakout. This indicator offers the trader a visual representation and trade trigger point of entry for both longs and shorts. This indicator will help the trader correctly position early on a developing trend. So let's take a look at the chart, see what we're talking about. Okay, so in this chart we're looking at a 750 tick of the S&P E-mini, and as with any oscillator, it is bounded by an upper area of extreme or overbought and a lower area of extreme or oversold. Very typical of any oscillator. Although what this one does, this one is specifically designed to help give us some specific trade triggers and identify not only divergences, which every oscillator is used to do, but to help give us the confidence to get in on a new trade when the momentum has shifted from bearish to bullish, bullish to bearish. So let's just take a look at and see, go through the chart and take a look at some specific examples. Okay. You can see up here the oscillator, the momentum had pushed to a new high and then pulled back and then forged yet another new high. Okay, but on that new high there was clearly, some oscillator divergence there. Okay, so this is a clear case where you can use the oscillator traditionally as a divergent, overbought, oversold type oscillator. Okay, what I would particularly want to look at here is as price came up and forged yet another new high, pretty aggressive move up. Okay, notice here that we have a bit of a downtrend type action here. Okay, it's followed by a breakout, okay, and then a pullback, okay, in the price. Well, specifically in the indicator, all right, it shows really well where price, the indicator pushed up above that zero line, or that 50% line, and then pulled back right here and held it. Okay, so this is that first pullback we're talking about. Okay, and we want to be able to identify that with a high degree of confidence, and that's what this indicator does. Holding above that 50% mark basically tells us the shift in the strength in price, right, has now shifted over to the bull camp. Okay, so in terms of price action and confirming that first pullback, this is where we want to enter the price, all right, long. And if we did, okay, as you can see, price had a nice little move up there, okay, and then again followed by a peak. Okay, and yet again there was some oscillator divergence up at the high area here. Okay, so it's that breakout of be it a downtrend line or a sideways consolidation. This is that, many times that breakout or the breakout attempt is a bit stealthy. We're not really quite sure. There's a lot of noise in terms of price action, okay, that's going on, especially on tick charts. But with this oscillator, it smooths out the entire noise that the price displays and gives us a very clear, clean indication of a price breakout and a momentum breakout on that first pullback. Okay, so again, you can see the safest place to enter it is on the end of the correction to a new swing, followed by